warm welcome to everybody here. It is the opening bell. I'm Ashley Reeve. Before we get started, guys, the information we will be discussing is opinion and should not be construed as advice in any way. Once again, what a pleasure to be with you. We want to make sure that we deliver, fantastic, updated, and most recent content. Remember, guys, if you have not gotten into any of our private, beginner, intermediate, and advanced sessions, you can do so. You can visit our website for more information to open an account, and you can reach out to our support team at care@tdmarkets.com if you'd like, to know how to do that. Today's opening bell is revolving around the response that is needed from Iran. They expected to respond to the U.S. proposal for ending the war, many sources are saying. And Trump has said that the U.S. had very good talks with Iran, but also issued a new threat. Now, that's important because we have that 14-point memorandum between the U.S. and Iran that basically, comes into play and is defined as a temporary peace framework. And this is obviously to stop the war and begin bigger negotiations. Now, some of those points include stop the fighting, a 30-day of negotiations. That simply means they'll use 1 month to work out a bigger long-term deal. Some of the other points there, no nuclear weapons, stronger inspections. There's also some points that includes the easing of sanctions, and for the frozen Iranian money to be released. Apparently, there's billions of dollars belonging to Iran that could be unfrozen and returned. And then lastly, some of the other points that I'm really just going through them, just to give you some form of image. The Strait is another one to be reopened. U.S. naval pressure should be reduced. And then obviously, maybe just the last two here. Iran should reduce shipping threats, and long-term nuclear limits should be discussed, possibly 12 to 15 years of a framework. Now that's what we're looking at, but out of those 14, there's about 8 of them that's contested by Iran, and that's important for us, guys. All right, I'm seeing the guys, Tato, Transfer, I see you there. Jules, I see you there. Good morning, good morning, good morning, good morning. The 8 of them is being contested, all right? And that's important for us to understand, at this point in time. The reason why I say that is because we're not looking at any long-term movements at this point in time. What's important to understand, there's still a lot of short sprints that's happening. The price is still very volatile. We've not finished the volatility, or at least the ranges in which the volatility has created, because in as much as prices are volatile, they create ranges, and these ranges need to be completed. And if you look at things like the Euro USD, we can see the inroads, which we discussed a couple of days ago. I actually put this down for the guys, and I said, listen, if we do break above the 117, we could be coming back, and we have done that now. So we've seen the inroads with the intraday movements. You can see it. If we continue this, if oil continues to go down, we're going to see it move all the way up to 1.18503. And that is just part of what we had discussed about 2 days ago. So it's really just making a lot of inroads right now, short sprints, same with the gold price, bumping up from that 4507, which we spoke about. We're also seeing the oil price coming back to the area it bounced from, which was that $98 and $90 per barrel level. We're also seeing the cryptocurrency really still hanging around. It's now gone to 81, which we had chatted to the guys about. We had said to them, listen here, we're seeing the movement now coming in with Bitcoin. We've gone past the 79 and mentioned to them, listen, if the oil price continues to do what it's doing, it's bringing a lot of optimism into the market for price to possibly go back to the 86,000 US dollars per coin. And that's what it seems to be doing. Now, again, we understand the price is wavy and it fluctuates, so we're not omitting the natural movement of price. But ultimately, the swing low here with all the substructures in between, we're anticipating it to rise to the 86,000 area. Again, guys, we're not just dealing with technicals here. We are looking at the drivers behind. And with the oil price subsiding, with that 14-point memorandum that could get seen as something important and to be agreed upon, we could see some of the other assets now beginning to recover a little bit. But guys, again, this is only a part of it. Don't forget, Iran could come back tomorrow and say something totally different. They expected to respond today, and so they could come back with something totally different. And this could send the oil price rallying again from where it is now. So please do not be surprised. We've not reached the stage of normalcy yet. We haven't. We have yet to find that area. I do think we could be pushing down a little bit further, back to back into this range over here. And then from $90, we're going to see what happens. Do we go down or not? I obviously have mentioned to the guys before, I see a lot of exhaustion that has kicked into the oil price, and we could be coming down a little bit further back to this range here, which is at $84 per barrel. I'm seeing the 80s level here, guys, as a correction for now in the next couple of weeks. But again, if we do not have that, we're going to get it pushing up to the 115, 120, 123 levels there. So please have a look, understand that right now we are being very flexible. We have a lot of intraday movements at this point in time, guys. There's a lot of intraday movements at this point in time. So we're looking at catching pips here of, 30 pips, 40 pips, below 100 basically. When you're looking at commodities, know how to trade the commodities market versus the Forex market. They have different types of ways in which they move in the market structure. So you have to know that to capitalize on the setup. So it's short sprints. You're bagging 25, 30, maybe 50 pips, a day, which is still a lot. It's quite a bit there. If you put a lot of, volumes on there, you can walk away with some good daily goals there. All right. So there's many guys, they're still stuck on, TPs, take profits, meaning levels now. So if price reaches that area, then they exit. Guys, in a market like this, price is so volatile, it could push up, miss your specific level by 3 pips and then come back down again. So this is actually placing a demand on you to really, really, be a little bit more versatile, a little bit more flexible, guys. So please bear that in mind as you are going through your setups. Have some daily goals out there for yourself. It will do you well. It will do you well because you're learning to adapt to what the market is doing. When we reach a state of normalcy again, then we'll see prices reach specific areas again with a little bit more confidence. Not that it can't happen now, but there's definitely a higher probability out there for some shorter sprints whilst we're waiting for things to really calm down a little bit. Because honestly, guys, it's not at a place where we can say it's done. We have yet to reach the state of normalcy. But that's it for this morning. There is a trading room this afternoon at 2 o'clock. So please join us there. We'll be going live as we normally do every week, Tuesdays and Thursdays, 2 o'clock via YouTube. And we're going to be seeing what's happening with the London session there. We want to see the overlap, what could happen with the London and the US today. All right, but that's it. Remember, if you'd like to open an account, here's that second one here, second reminder to all the new guys joining us for the first time, www.tdmarkets.com. You can also email us at care@tdmarkets.com. Have a fantastic morning, guys. It's 9:09 at the moment. This is the opening bell. I'm Ashley Reeve, and it's an absolute pleasure being with you. Have a good one, and we'll see you soon. Ciao, ciao.